So here's what you need to know about the tax section on the Inflation Reduction Act and how it's going to impact your taxes. The government is going to fund the IRS in the tune of $80 billion. Taxpayers and tax professionals are well aware that dealing with IRS can sometimes be a nightmare, right? It could be a very uncomfortable situation. And the reason for that is because the agency has dated technology and also is understaffed. So the Inflation Reduction Act, the new law, it's going to look into help expand and improve the operations of the agency, which is the agency that enforces the tax law for the US Treasury Department. Let's be frank, the agency has become so big and is so understaffed that sometimes in order to get a tax return processed can take months, if not years. Here is what the IRS is going to do with a new $80 billion worth of funding. Number one, it's going to enhance the process of tax enforcement, especially with the high income earners. Number two, it's going to improve operations. Number three, it's going to invest in technology. And number four, it's going to improve customer service. Check this out. The law was passed on August 16th of 2022 with $80 billion. And most people would think that the $80 billion are going to be spent right away. In reality, what's going to happen is that the $80 billion are going to be invested over a period of 10 years. What are some of the wild claims that are happening out there? Most people are afraid of the IRS, right? And I understand that. And the IRS indicates that it's going to hire 87,000 people, right? And people believe that the 87,000 people that the IRS is going to hire, it's going to be people and agents with guns. So people think that the IRS is going to hire 87,000 people that are going to be wearing badges and guns and collect taxes. And frankly, that's not what's going to happen. So the professionals that the IRS is going to hire, it's going to be number one, customer service reps. Number two, technology workers. And number three, enforcement agents. Something that I think is very interesting is that the law is not taking into consideration the 50,000 people that are going to be retiring in the next 10 years, right? So you have some people that have been working for the agency for 15, 20, 25 years. It's estimated about 50,000 people are going to retire in the next 10 years. So then you have 87,000 new hires and 50,000 people that are going to be leaving. And that's going to give you a net of 37,000. So the question is whether the law is going to maintain the 50,000 people that are working and are going to be retiring in the next 10 years, meaning are they going to be replacing those in the next 10 years, plus in addition of the 87,000 new hires? That is a question that needs to be answered. Another aspect that we need to consider that people do not talk about too much is that the budget can actually change. So the $80 billion can change in the future. Right now, the current budget of the IRS is $13 billion. But something that could change is the future fund. And that is because there are appropriations that are made by Congress on every single year. Every single fiscal year, there are new appropriations. So the funding, it's going to change. It's bound to change. Why? Because you're gonna have new political parties the next 10 years in Congress. And Congress is the one in charge of the US budget. They are the ones who propose it, and they are the ones that are gonna go back and forth. Here's what we want, here's what we need, and here's what the US needs, and so forth. And there's gonna be pull and push in regards to that, right? So we know that there's gonna be $80 billion worth of funding in the next 10 years, right? But that funding could go up and it could go down depending on the Congress and depending on the party that's in charge. Another aspect of the funding is that it's flexible, meaning that more money could go into customer service and less money could go into tax enforcement, or vice versa. So we also need to talk about what is the backlog that the IRS has. There's a crushing backlog currently. The stats say that there's about 17 million paper tax returns that are yet to be processed by the IRS, and millions of tax notices that are not yet processed, primarily due to the pandemic. So the funding is telling you, yes, this is what we're gonna be doing the next 10 years, but yet right now there's 17 million tax returns that are yet to be processed and millions of tax notices that are yet to be addressed. So with the new funding, we all know that more audits are gonna come. It's just bound to happen. Why? Because there's gonna be more people, more technology, and more resources, period. But that is not going to happen just tomorrow. It's not happening just yet. Just because the new funding is going to bring more people doesn't mean that the people are going to be ready to do the work right away. It takes a long time for someone to understand what a financial statement is. How to read a bank statement, how to read, a list of deductions, and find discrepancies between what's being filed and what the records show. And the government has said that it's going to focus primarily on high income earners. And typically those are more difficult to audit and more difficult to understand. So for that reason, the new agents, the new employees that the IRS is going to have, it's just going to take some time for them to understand, get up to par, get up to level, and understand how the process is, how the process works, and how to effectively conduct an audit. The government also has said that it's going to increase the audits on high income earners. And it has said that the threshold is going to be, or the minimum is going to be $400,000 plus. If you're making less than $400,000 a year, the likelihood of you getting an audit is going to be less. However, that is a question that is yet to be answered because we're not there yet. An audit is not necessarily an audit, right? Sometimes people, get a notification from the IRS saying, you forgot to include this W-2, you forgot to include this 1099. We need to verify that you're claiming the right dependents and so forth, right? That by itself is not an audit. An audit, primarily, the IRS would go through your records, would go through your deductions, would go through your credits, would go through your bank statements, and it's going to compare those with the tax returns that you file. That's called an examination, right? So there's a difference between what an examination is and what a tax notification is for you to confirm or to make sure that you're providing the right information to the IRS. So an audit is not always an audit, okay? So get your stuff ready. You always want to be ready. Always want to have your personal financial records. You always want to have your business tax records and business financial records available. That's why you always want to be working with an organization that's supporting you with your taxes and with your accounting, as well as your personal taxes, okay? You always want to make sure that you have that on your side. The likelihood of an audit, it's yet to be determined, right? It's probably going to increase based on the new funding. It's just not going to happen now, but it's going to happen in the future, and you always want to be ready. The statute of limitations on minimal stuff is 3 years, and the statute of limitations on big stuff is typically around 6 years. So you always want to have your records available for your comfort, and you always want to be ready in case you have an audit, that you work with a professional organization that's going to help you go through that process. My name is Victor Delerme. I'm a CPA. Thank you so much for watching, and we'll see you in the next one.